And if you do not own gold and silver, you're not going to get any when this thing breaks, because it's going to move the little by little by little, then the bang all at once. It's going to be the biggest bang that you could ever imagine. When there is no silver to deliver on these naked short positions, when the ETFs break, when all of this break, and it seems like it's getting to the point of breaking, I think it's a once in a generation opportunity that
You're watching Silver News Daily. Subscribe for more. Imagine a scenario where silver hits an astonishing $350 an ounce. You might think it's impossible, but renowned analyst Alex Newman believes this could be our reality soon. Stay with us as we dive into why this shocking prediction might not be as far-fetched as it sounds, and what it means for you and your investments.
Production every single day in silver. This is how they have, in concert with the COMEX, held the price down. The West has ruled the metals market forever by using this rehypothecation, this leverage. By permitting more paper claims to be created on the same amount of gold and silver allows the management of the price. It's not going to rise if you can way overwhelm the supply and drive it down, because in concert, the Western central banks had all the money, right? So I want people to think about this for a moment. Why is it that the commercial banks are showing up at Shanghai, and at the same time they're showing up, the Shanghai silver stocks are bleeding down to their lowest level in 4 years? So I guess I would say in conclusion, you cannot export gold out of China without first depositing the bar in Shanghai. We talked about that. We understand that, but you can export silver. And all of a sudden, these big bullion banks are showing up naked short, mind you, massively naked short to the Shanghai Exchange for 4 straight months or 4 straight weeks, begging them, it looks like, for help. Think of the arbitrage that's going on right now. Silver at 36.01 this morning in Shanghai. Silver goes way up over a holiday weekend when the public has no access to the market. It's knocked down into Western trading, shoots right back up here. They're trying to hit it again right now. It's like we are entering a period of time where maybe these commercial banks are beginning to eat one another, that it's every man and woman for themselves, right? So I want to put that a little more color on this for 1 second, because there was just an article by Jeffrey Curry that came out. And most of you will remember Jeffrey Curry. He's the longtime global head of commodities at Goldman Sachs. And people will tell you he's as tied in as they get into the top of the commodity world. He's now, he left Goldman. He's at the Carlyle Group. And he's been saying something that I've been saying on your show for a long time as well. And that is that for the first time ever, he's saying this is why it's different. The first time ever, the dollar recycling is not occurring. It's being replaced with, let's call it, gold and silver recycling. And if you remember, he's the guy who said he slipped up big time. He's the guy that said the potential for the silver market to be squeezed is impossible because the shorts are the ETFs. He said the ETFs buy the physical and they turn around and sell it on COMEX to be able to hedge the physical position like any other corporate. A commodity, rather, excuse me.
As we navigate through these uncertain times, the global economy faces a multitude of challenges. The potential for new pandemics looms large, creating waves of uncertainty and fear in the financial markets. Central banks and governments are tightening their grip on resources, leading to increased centralization and control. This backdrop of heightened economic instability and resource scarcity makes the case for secure investments more compelling than ever. Precious metals like silver are gaining attention as safe havens. Let's explore how these dynamics are setting the stage for a potential surge in silver prices.
Ounce gold, good delivery bar, they both trade the 1,000-ounce bars. There was an article by Forbes magazine recently that said there is now vastly more paper gold and silver, physical, or at least gold anyway. They called it between 200 and 300 trillion in paper gold compared to 11 trillion in physical. So when you talk about this rehypothecation, when you talk about the ability to control the paper price by issuing more and more and more contracts, this is how they've played the game forever. They have rehypothecated the heck out of the markets controlling the price, which is really the kryptonite to the Western system. These spot contracts, as they're called, represent well over 90% of the trading in the London Metals Exchange. In other words, the bullion banks are making promissory notices. Well, if you want it, fine, but no one ever stands for delivery. They keep issuing it. They overwhelm the price. But if they were ever called on the carpet, what would happen? We just mentioned that the silver in the COMEX market is 1,600+% rehypothecated. What would happen if everyone stood for delivery? Now, I want to put some of these trading volumes in perspective. The LBMA, the London Bullion Metals Association, publishes a monthly report on trading volume. So we said that the silver in the LBMA is roughly 800 million ounces, of which 500 million belongs to the ETFs. That leaves 300 million ounces left. Yet they trade roughly 292 million ounces of silver per day. 292 million ounces of silver per day. And 20 million ounces of gold are traded per day on the LBMA. But in a survey that was done between the bullion banks and the LBMA in 2011, they admitted that actually those numbers are about 10 times understated. And the way that they explained it was that if a bullion bank were to sell 20 contracts and buy 10 contracts, the net result would only be 10 contracts, and they would only count 10 contracts instead of 30. So what they're basically saying is it's about 10 times understated. And that would mean, just using math, that it's actually, instead of 20 million ounces of gold, it's 200 million ounces of gold. And compare this to the Shanghai Metals Exchange, where you have to deposit a bar first in order to trade it. Their daily volume is only 300,000 ounces, yet the London Metals Exchange is doing 200 million ounces per day. That would also mean that the London Metals Exchange is doing over 2.9 billion, with a B, ounces of silver per day, right? In other words, they're trading over 3.5 times the amount of yearly.
To understand the potential for silver to reach $350 an ounce, we need to look back at its historical performance during times of economic uncertainty. Silver has a long-standing reputation as a safe haven asset, often outperforming other investments during periods of market instability and economic turmoil. Let's dive deep into the annals of history to see how silver has behaved under similar circumstances. One of the most notable periods was the late 1970s and early 1980s, a time marked by high inflation, geopolitical tension, and economic uncertainty. During this period, silver prices soared, reaching an all-time high of nearly $50 an ounce in 1980. This spike was driven by a combination of factors, including the Hunt brothers' attempt to corner the silver market, rampant inflation, and a lack of confidence in fiat currencies. Adjusted for inflation, the $50 peak would be equivalent to around $150 today. This historical event illustrates how external pressures and market dynamics can lead to significant increases in silver prices. Another significant period for silver was the global financial crisis of 2008. As the housing market collapsed and major financial institutions faced insolvency, investors flocked to precious metals. Between 2008 and 2011, silver prices climbed from about $11 an ounce to nearly $50 an ounce. This dramatic increase was fueled by a loss of confidence in the banking system, widespread economic uncertainty, and unprecedented monetary easing by central banks around the world. Investors sought the stability and security that tangible assets like silver could provide during such turbulent times. More recently, during the COVID-19 pandemic, we witnessed another surge in silver prices. In 2020, as the pandemic spread and economies went into lockdown, the demand for silver initially dipped due to industrial shutdowns. However, as governments rolled out massive stimulus packages and central banks cut interest rates to near zero, silver prices began to rise sharply. By August 2020, silver had reached over $29 an ounce, nearly doubling from its March lows. This was driven by investors seeking a hedge against potential inflation and currency devaluation, as well as a renewed interest in silver for its industrial uses, particularly in technology and green energy sectors. These historical precedents highlight a pattern. During times of economic distress, uncertainty, and inflation, silver tends to perform exceptionally well. The metal's intrinsic value, combined with its diverse industrial applications, makes it a reliable store of value. Unlike paper currencies, silver cannot be printed at will, and its supply is relatively limited, adding to its appeal during periods of financial instability. Looking at these trends, we can see why experts like Alex Newman are predicting a significant rise in silver prices. The conditions today are strikingly similar to those past crises. Economic uncertainty due to potential new pandemics, central banks' aggressive monetary policies, and increased demand for silver in industrial applications, particularly in green technologies. With inflationary pressures building and the global economy facing unprecedented challenges, the stage is set for silver to once again prove its worth as a safe haven asset. In conclusion, silver's historical performance during times of economic uncertainty and turmoil provides a compelling case for its potential future surge. As we face the possibility of new pandemics, centralization of resources, and economic disruptions, silver's role as a secure investment becomes increasingly important. The patterns of the past suggest that Alex Newman's prediction of silver reaching $350 an ounce might not be as implausible as it seems, especially when considering the metal's track record in similar circumstances.
But that's not how it works. You wouldn't hedge metal on an ETF. You hedge something if you're like me, a company that has an inventory where I own the inventory, but they're safeguarding someone else's metal. You're not hedging it for them. They're taking on the risk. They think it's going to go higher. Why would you hedge it? So what he was basically saying is that they sell the metal into the market, creating more volume, more supply to help suppress the price. It's illegal in essence. He's admitting that they short the silver that they receive into the market. I've always said that the ETFs are a tool for the manipulation of the market. He admitted it. Well, it was a faux pas, right? So anyways, this is done to help suppress the price. But now he said a key difference between the current commodities rally and those of the past has to do with the changing nature of the petrodollar. Where have we heard that before, Dunnigan? With major commodity producers no longer automatically recycling their dollar-denominated oil revenues back into U.S. treasuries. Where have we heard that before, Dunnigan? It explains a lot why gold prices are as strong as they are, he says, and what is the evidence of that is the emerging markets, the BRIC countries. Wonder where we've heard that before. All met with Saudi Arabia and other key participants in November of last year and discussed how they're going to trade with one another using local currencies, and then whatever it nets out in settling, they would settle in gold. Where have we heard this before, Dunnigan? He notes that both China and India are paying for oil in local currency, and he thinks that the Russian sanctions on FX reserves mean we are unlikely to see U.S. dollar commodity deficit recycling playing out ever again. Where have we heard any of this, Dunnigan? I ask you. How long have we been saying this? And now Jeffrey Curry, that the head of the table, is saying it. He says, confirmation, and this is the interesting piece, the last piece of the puzzle. He says, Curry's confirmation of gold recycling of commodity surpluses, and I would add silver into that, and I would add oil into that, not just gold, means, here's the key, the de facto net settlement is gold. Let's not forget that oil markets, by the way, Dunnigan, are 12 to 15 times the size of global gold markets. So if indeed all of these countries are buying oil, using local currencies and settling out the differences instead of treasuries into gold, what does that really say for gold's potential? What does it really say for silver's potential in this massive shortage that we see of available silver? And why are the four big bullion banks that are probably the four that are shorting it the most on COMEX, why are they going to the Shanghai Metals Exchange 1 week after another? In essence, it seems they're begging for help in getting out of these short positions. And since they've gone there, the Shanghai silver stockpiles are falling like a stone. Could it be they're working out a deal? We'll give you gold. We'll give you whatever you want. We need your silver or we're going to blow up. And I think
Why is silver considered a secure asset during times of economic turmoil? To answer this, we need to delve into the intrinsic properties of silver and its historical role as a safe haven. Silver, like gold, has been used as a form of money and a store of value for thousands of years. Its unique properties make it not only a medium of exchange, but also a hedge against inflation and currency devaluation. Firstly, silver has inherent value. Unlike fiat currencies, which can be printed in unlimited quantities by central banks, silver is a finite resource. Its supply is constrained by the amount that can be mined and refined each year. This limited supply, combined with its demand in various industrial applications, helps maintain its value over time. When investors lose confidence in paper currencies due to inflation or other economic issues, they often turn to tangible assets like silver that cannot be devalued by government policy. Moreover, silver's historical role as a monetary metal adds to its appeal. Throughout history, silver has been used alongside gold as a form of currency and a standard of value. Many of the world's most stable and long-lasting currencies were based on the bimetallic standard, where both gold and silver were used as legal tender. This historical precedent reinforces silver's status as a reliable store of value during economic instability. In modern times, silver's role as a safe haven asset has been reinforced by its performance during market crises. During the 2008 financial crisis, for example, silver prices surged as investors sought refuge from the collapsing stock market and banking system. Similarly, during the COVID-19 pandemic, silver prices spiked as economic uncertainty grew and governments implemented unprecedented fiscal and monetary measures. Silver also serves as a hedge against inflation. Inflation erodes the purchasing power of money, making tangible assets like silver more attractive. When inflation rises, the value of paper currency decreases, but the value of silver tends to increase. This is because silver retains its purchasing power over time, unlike fiat currencies, which can lose value rapidly in an inflationary environment. Investors often flock to silver during periods of high inflation to preserve their wealth. In addition to its monetary attributes, silver's industrial applications add another layer of security to its value. Silver is widely used in various industries, including electronics, solar energy, and medical devices. Its unique properties, such as high conductivity and antimicrobial effects, make it indispensable in many modern technologies. As the demand for these technologies grows, so does the demand for silver. This industrial demand provides a stable base for silver's value, even in times of economic distress. The ongoing green revolution is a prime example of how industrial demand can drive silver prices. As the world shifts towards renewable energy and electric vehicles, the need for silver in solar panels, batteries, and other green technologies is increasing. This growing demand ensures that silver remains valuable, even as other assets fluctuate with market conditions. Furthermore, central banks and institutional investors often hold significant amounts of silver as part of their reserves. This practice provides additional stability to silver prices, as these entities can act as buyers of last resort, supporting the market during periods of extreme volatility. This institutional demand adds a layer of security to silver as an investment. In summary, silver is considered a secure asset due to its intrinsic value, historical role as a monetary metal, performance during past crises, and its ability to hedge against inflation. Its diverse industrial applications further bolster its value, providing a stable demand base. As we face the possibility of new pandemics, economic disruptions, and increased centralization of resources, silver's role as a safe haven asset becomes even more critical. This combination of factors makes silver a compelling choice for investors seeking security in uncertain times, supporting the idea that silver prices could indeed reach new heights.
Yeah, that's exactly what it is. I mean, that's what's happening. Our debt, if you look from a historical perspective, owning another country's debt as an asset is a pimple worth of time and the whole scale. Gold and silver and commodities is wealth, and I think, and have been for thousands of years. And I think because of the sanctioning and the aggression and the confiscation of treasuries and of dollars, the rest of the world has had it. Not only that, I think it's become very evident that we are a country that is addicted to spending and have a real problem with our fiscal policy. And we are creating $1 trillion in debt every 100 days. Why would anyone want to hold our treasuries? We have chosen publicly, visually, inflation over austerity. Why would anyone want to hold our treasuries when they're being inflated away and when they're being sanctioned away? And so it just makes no sense. And I think I've said one comment I said on your show and others for a long time, and it's even becoming more ingrained in my head when I think of it, is that commodities are the glue that makes all these other countries stick together. All of these other, the pushback is who's going to trust China? Who trusts us anymore? It's the commodities that pulls the word trust out of it. Fine, we trade in local currencies, but any excess, we settle in gold. That's the deal. We settle in silver. We settle in oil. These commodities are changing the landscape. He who has the commodities makes the rules, period. They've been playing by our rules for a very long time. The United Kingdom put out a piece not too long ago saying, geez, we've really put ourselves at the mercy of other countries because we don't have the natural resources we need. And whether it's rare earth metals or oil or precious metals or grain, whatever the commodities are, you can see a common denominator. Look what we've done to ourselves with energy and all of the uranium and all of these things that we've mothballed or just neglected. These countries are jumping all over it. And when you talk about wanting to own treasuries, why would anyone want to own treasuries from a country it's broke, insolvent, and going around the world imposing sanctions? A country that's lost its bearing here at home. All of these things, they're all interconnected. And it's almost going back to it, like we're trying to make this happen. I mean, either that or our politicians, our leaders are so stupid it's ridiculous, because you can see how these countries have quietly said, listen, we don't want to hold the treasury anymore. We don't want to be beholden to them. Let's all just start trading with ourselves, and we will settle in commodities and remove the trustless situation. We will inspire confidence and trust and begin to trust one another through delivering of commodities. And I think that's exactly what's happening. And so why are the Chinese bailing out the commercial banks? Because the commercial banks, I think, still offer something to the East that they want. And there'll come a time when they won't bail them out either. But there's some deals that are being struck that we don't know of in this opaque landscape. But I can assure you that this is not an act of benevolence. There is a quid pro quo going on in the back rooms that we don't know about.
One of the most compelling reasons for silver's potential surge to $350 an ounce lies in its critical role in the green revolution and its growing industrial demand. As the world moves towards sustainable energy solutions and advanced technologies, silver's unique properties make it indispensable in a variety of applications, particularly in renewable energy and electronics. Silver's role in the green revolution is most prominently seen in the solar energy sector. Silver is a key component in photovoltaic (PV) cells, which convert sunlight into electricity. The metal's superior conductivity and reflectivity make it ideal for enhancing the efficiency of these cells. According to the Silver Institute, approximately 10% of annual silver demand comes from the solar industry. As countries ramp up their renewable energy targets to combat climate change, the demand for solar panels, and consequently, silver, is set to rise dramatically. China, the United States, and India are leading the charge in solar energy expansion. China, the world's largest producer of solar energy, continues to increase its installed solar capacity at an impressive rate. Similarly, the United States has seen significant growth in solar installations, driven by both federal incentives and state-level mandates. India, with its ambitious goal to achieve 100 GW of solar capacity by 2022, is also contributing to the robust demand for silver. This widespread adoption of solar technology underscores the metal's importance and supports its long-term value. In addition to solar energy, silver is crucial in the production of electric vehicles, EVs, and their infrastructure. EVs use silver in their electrical control systems, which are essential for the operation of the vehicle. Silver's high conductivity ensures efficient transmission of electricity within the vehicle's components, contributing to overall performance and reliability. As governments worldwide push for cleaner transportation solutions, the adoption of EVs is expected to surge, further driving demand for silver. Moreover, the development of charging infrastructure for EVs, particularly inductive charging systems, relies heavily on silver. Inductive charging uses electromagnetic fields to transfer energy between coils, and silver's superior conductivity enhances the efficiency of this process. As inductive charging technology becomes more prevalent, especially in public and commercial settings, the demand for silver will continue to grow. Beyond renewable energy and transportation, silver's antimicrobial properties make it invaluable in the healthcare industry. Silver is used in medical devices, wound dressings, and coatings for hospital surfaces to prevent infections. The ongoing emphasis on hygiene and infection control, particularly in the wake of the COVID-19 pandemic, ensures steady demand for silver in medical applications. The electronics industry is another significant driver of silver demand. Silver is used in various electronic devices, including smartphones, computers, and televisions, due to its excellent conductivity and durability. The proliferation of consumer electronics, coupled with advancements in technology, ensures a continual need for silver. As the Internet of Things, IoT, expands and 5G technology rolls out globally, the reliance on silver and electronic components will only increase. While technological advancements have led to more efficient use of silver, known as thrifting, the overall demand continues to rise due to the expanding market for these technologies. For instance, advancements in PV cell technology have reduced the amount of silver used per cell, but the exponential growth in solar installations compensates for this reduction. Similarly, while automotive manufacturers strive to use materials efficiently, the increasing number of EVs and their sophisticated electronic systems sustain high silver demand. The convergence of these factors, the rapid expansion of renewable energy, the shift towards electric vehicles, the critical role of silver in healthcare and electronics, paints a robust picture of silver's future demand. This industrial demand, combined with silver's status as a safe haven asset, creates a compelling case for significant price appreciation. In conclusion, silver's integral role in the green revolution and its diverse industrial applications provide a strong foundation for its value. As the world increasingly embraces sustainable technologies and advanced electronics, the demand for silver is set to grow. This industrial demand, coupled with economic uncertainties and the need for secure investments, supports the possibility of silver prices reaching unprecedented levels. Alex Newman's prediction of silver climbing to $350 an ounce is grounded in these tangible and transformative trends, making it a scenario worth considering seriously.
The talking heads and people who I respect a lot in this industry are not acknowledging this is a game changer as far as I'm concerned. And it's difficult to know how much gold and silver is really being delivered, because these purchases, largely the London Metals Exchange is what's called the over-the-counter market, the OTC. And the members in the OTC market on the London Metals Exchange, they deal with one another on a bilateral basis, right? So they trade with one another, which means they take all the risks, including those of credit and between the two parties of a transaction. And so this is different to a exchange environment where you have clearinghouses and a backstop. Here, the big difference is that it's riskier, it's less transparent, and that the exchanges are subject to fewer regulations. So this is opposed as opposed to an exchange traded environment like the COMEX. So what you have is a system that is opaque. And we can't really tell how much gold and silver are being transacted through the OTC markets. We talked about that last week with the huge amount of gold deliveries that are being delivered to Hong Kong and then trucked over to Shanghai, like massive amounts of gold kilo bars off of COMEX. They're bleeding dry our exchanges, and it's all being done on the OTC market with not great transparency. And it's becoming difficult to tell exactly how much, but we do see the flow. If you look, you don't have to look very hard. You can see the flow from west to east. Okay. So even the Financial Times recently just pointed out that the global flows of metal, the real level of buying from west to east is, especially China and Russia, has been way, way understated from what is reported. This was just in an article that came out in the Financial Times. You just had a guy, an analyst from Bank of Montreal, say that China is massively understating what they're accumulating. But this is a trend that's been going on for a while. Why tell your enemy what it is that you're accumulating? This is misdirection. They're not going to tell us. But the analysts, the Financial Times and Bank of Montreal have at least had the courage to say those numbers that we are seeing are not right. They're massively understated. Okay. So what the LBMA and the COMEX have in common is that they trade spot gold and silver contracts. Let's call them promissory notices. Let's call them promises to deliver. But the point is that when these exchanges were set up, no one really ever stood for delivery, right? And these countries that are doing so right now did not have the wherewithal or the sophistication to do so. On COMEX, it's typically 100-ounce gold bars. They do have the mini contract, the kilo bars, which we have seen been flowing to China. In London, it's the 400-ounce.
As we delve deeper into the factors that could propel silver prices to $350 an ounce, it's important to examine the potential economic disruptions that could act as catalysts. These disruptions create an environment where the demand for safe haven assets like silver surges dramatically, pushing prices higher. Let's explore some of these scenarios in detail. Firstly, the possibility of new pandemics poses a significant threat to global economic stability. The COVID-19 pandemic has already shown us how quickly and severely a health crisis can disrupt economies worldwide. New pandemics could lead to renewed lockdowns, disrupted supply chains, and widespread economic uncertainty. Such conditions typically drive investors to seek refuge in precious metals. The fear and uncertainty surrounding health crises increase the appeal of tangible assets like silver, which are perceived as more stable compared to fiat currencies and other financial instruments. Additionally, the centralization of control over resources is another potential disruption. Governments and large corporations are increasingly consolidating control over critical resources such as energy, water, and even food supplies. This centralization can lead to monopolistic practices, reduce competition, and increase prices for essential goods and services. In such a scenario, the public and investors alike may lose confidence in the ability of centralized entities to manage these resources efficiently and fairly. This loss of confidence often results in a flight to precious metals, which are seen as a hedge against systemic risk and economic mismanagement. Another significant disruption could come from geopolitical tensions and conflicts. Rising political and military tensions between major world powers can create economic instability and market volatility. Historical precedents show that during times of war or severe geopolitical strife, the demand for safe haven assets like silver increases. For example, during the Gulf War in the early 1990s and the more recent tensions in the Middle East, silver prices experienced upward pressure. If similar conflicts were to arise or if existing tensions escalate, we could see a substantial increase in silver prices as investors seek to protect their assets from geopolitical risks. Furthermore, the potential for severe economic policy shifts could also disrupt markets. Central banks around the world have been employing unconventional monetary policies, such as negative interest rates and massive quantitative easing programs, to stimulate their economies. While these measures have provided short-term relief, they have also led to concerns about long-term economic health and the potential for hyperinflation. If central banks are forced to reverse these policies abruptly due to unforeseen economic conditions, it could lead to significant market turmoil and increased demand for silver as a staple store of value. The risk of cyber attacks on financial systems is another disruption that cannot be overlooked. As financial institutions and markets become increasingly digitized, they also become more vulnerable to cyber threats. A successful cyber attack on a major financial institution or market infrastructure could cause widespread panic and a loss of trust in digital financial systems. In such an event, the demand for physical assets like silver, which are not reliant on digital systems, would likely surge as investors seek to safeguard their wealth. Natural disasters and climate change also pose potential economic disruptions. Extreme weather events, such as hurricanes, floods, and wildfires, can cause significant economic damage and disrupt global supply chains. These events can lead to increased uncertainty and volatility in financial markets. As the frequency and severity of such events increase due to climate change, the demand for secure and reliable assets like silver could rise. Silver's role in green technologies, such as solar panels, further enhances its appeal as an investment during times of environmental crisis. Lastly, the ongoing technological revolution and automation could disrupt labor markets and economic structures. While technological advancements bring about increased efficiency and new opportunities, they also pose the risk of widespread job displacement and economic inequality. If automation leads to significant unemployment and social unrest, it could create economic instability and increase the demand for safe haven assets like silver.
Happening too. Look at the Belt Road Initiative. I mean, I don't care that there's always going to be people say, oh, China's indebting these countries. And maybe, but they're doing it in a cooperative manner. Do you see China? Look, China's not perfect. Okay. They're not. And, let's just take Taiwan out of the equation. I mean, because I don't think the people in the West truly understand the dynamics between China and Taiwan. But do you see China having military bases all around the world? Do you see China doing things all around the world with coercion and sanctions? No, they are in a cooperative manner emulating kind of what the Western countries did for 300 years, but they're doing it cooperatively. They're going around and expanding and allowing these countries to stand on their own 2 feet by building the infrastructure that allows them to do this. And so say what you want, everyone needs a hand somewhere, and there is no perfect way of doing it. But in my mind, the way that China has done it has inspired a much greater sense of loyalty and cooperation. Even the Shanghai Cooperation Organization and the Belt Road Initiative is not something to be ignored. I've talked about that with you for going on 4 years, and it's not. And this all fits together. And they're putting all of this together in a cooperative manner, and they are using commodities. Zoltan Pozsar was dead on right in 2020 that we are entering a new system that's all about commodities, and that's exactly what it is. And they are becoming worth more than currency. No one wants the dollar that is ultimately going to die. Yeah, they have to take it. They have to use it to get out of their debt positions or because it's still the system or whatever it is. They don't want to. They have to. That's going to change. And that's why they are replacing their treasuries, which would be the first step in commodities, because there's your savings, and you can see very, very easily that especially gold has way outperformed the bond market with no counterparty risk for the better part of 26 years. If you just look at it or 25 years, just go back to the beginning of the century. So look, I believe this in my soul that this is happening. And I think you can, if you look closely, you don't even have to be the smartest guy in the world. I'm not, to see the crumbs that are being laid here. And they're using, and I've been saying it forever, they've been using the suppression of the Western markets to accumulate, and that's exactly what they're doing. And now they've got a situation where that suppression could quickly blow up the whole system. These Western banks who are naked short, whether it be through naked shorting ETFs, as Jeffrey Curry told us, because that's not their silver to be shorting. So that's naked. Or just to be creating massive amounts of naked short positions. Okay, fine, we'll stand for delivery. And when all of a sudden there's the inability to deliver, that's when the whole thing, just like that, goes upside down. When everyone runs, gimme, 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 and the whole thing blows up. And that's when the West loses its ability to control price completely, as the new exchanges in Shanghai and Dubai and Moscow and across the globe, the countries who produce it all, who accumulate it all, and have been accumulating it copiously for years, will set the real price. That's when things really change. What does it look like here then? Haven't given that enough thought. My mind kind of goes fuzzy when I get there. But I'm sure there will come a time where I have no choice but to give that a lot of thought. Right now, I'm just basically feeling that we're heading down that path with a great deal of inevitability.
Well, Andy, our viewers and I appreciate your visits here because of the sincerity and the depth of your...
As we delve deeper into the factors that could propel silver prices to $350 an ounce, it's important to examine the potential economic disruptions that could act as catalysts. These disruptions create an environment where the demand for safe haven assets like silver surges dramatically, pushing prices higher. Let's explore some of these scenarios in detail. Firstly, the possibility of new pandemics poses a significant threat to global economic stability. The COVID-19 pandemic has already shown us how quickly and severely a health crisis can disrupt economies worldwide. New pandemics could lead to renewed lockdowns, disrupted supply chains, and widespread economic uncertainty. Such conditions typically drive investors to seek refuge in precious metals. The fear and uncertainty surrounding health crises increase the appeal of tangible assets like silver, which are perceived as more stable compared to fiat currencies and other financial instruments. Additionally, the centralization of control over resources is another potential disruption. Governments and large corporations are increasingly consolidating control over critical resources, such as energy, water, and even food supplies. This centralization can lead to monopolistic practices, reduce competition, and increase prices for essential goods and services. In such a scenario, the public and investors alike may lose confidence in the ability of centralized entities to manage these resources efficiently and fairly. This loss of confidence often results in a flight to precious metals, which are seen as a hedge against systemic risk and economic mismanagement. Another significant disruption could come from geopolitical tensions and conflicts. Rising political and military tensions between major world powers can create economic instability and market volatility. Historical precedents show that during times of war or severe geopolitical strife, the demand for safe haven assets like silver increases. For example, during the Gulf War in the early 1990s and the more recent tensions in the Middle East, silver prices experienced upward pressure. If similar conflicts were to arise or if existing tensions escalate, we could see a substantial increase in silver prices as investors seek to protect their assets from geopolitical risks. Furthermore, the potential for severe economic policy shifts could also disrupt markets. Central banks around the world have been employing unconventional monetary policies, such as negative interest rates and massive quantitative easing programs, to stimulate their economies. While these measures have provided short-term relief, they also led to concerns about long-term economic health and the potential for hyperinflation. If central banks are forced to reverse these policies abruptly due to unforeseen economic conditions, it could lead to significant market turmoil and increased demand for silver as a staple store of value. Natural disasters and climate change also pose potential economic disruptions. Extreme weather events, such as hurricanes, floods, and wildfires, can cause significant economic damage and disrupt global supply chains. These events can lead to increased uncertainty and volatility in financial markets. As the frequency and severity of such events increase due to climate change, the demand for secure and reliable assets like silver could rise. Silver's role in green technologies, such as solar panels, further enhances its appeal as an investment during times of environmental crisis. Lastly, the ongoing technological revolution and automation could disrupt labor markets and economic structures. While technological advancements bring about increased efficiency and new opportunities, they also pose the risk of widespread job displacement and economic inequality. If automation leads to significant unemployment and social unrest, it could create economic instability and increase the demand for safe haven assets like silver.
Excuse me if it lacks a little bit of coherence, but I hope it does. Because there's a lot to take in, but I'm trying to put it all together so people can understand. Today, we've talked a lot about the arbitrage going on in the Shanghai Metals Exchange, Shanghai Gold Exchange. Today, 28th, silver closed at $36.01 on the Shanghai Gold Exchange. They can't hold this down anymore. They can't. And when you see open bids in Shanghai for $36 silver, I think it's just the beginning. But let me try and put all this together. So it appears as though we have the makings of what could be a giant silver squeeze. And I would also argue it appears to me Zoltan Pozsar was dead on. I think in 2020, he called the Bretton Woods 3.0, number one when we took over from the pound sterling, number two with the petrodollar in 73, and now number three, the system that will be all about commodities and transparency. And it's as if the commodities are becoming more valuable than money. And let's call it currency, not money, more valuable than currency. There's an old saying, he who has the gold makes the rules, but you could go even further and say he who has the gold, the silver, the rare earth metals, the copper, all of the commodities, hard and soft, make the rules. And when you think about China accumulating the London Metals Exchange, when you think about China striking deals for natural resources all around the globe, when you think about, including food, wheat, corn, soybean, you name it, when you talk about the BRICS nations in general being commodity rich, this begins to make great sense. And it seems to me that the gold and silver markets are literally playing by a new set of rules that I've never seen before in my time, 34 years in this industry. The resiliency of the market is astounding to me. These are things that never have happened before. And I think especially silver. And when you look at the COMEX numbers and you can see that these bullion banks, the cartel bullion banks, have been holding back the price of silver for a very long time. In fact, 4 or 5 commercial banks holding the largest concentrated short position in any commodity traded on COMEX. It's in silver. But as the price has been rising, the losses on these commercial banks' balance sheet has to be extraordinary and borderline unbearable at some point. And they're going to be forced to cover the paper shorts. And I think that's something that we've always just taken for granted. People will say, well, they can.
After exploring the multifaceted drivers behind silver's potential surge, it's clear that the convergence of economic instability, industrial demand, and market dynamics supports Alex Newman's bold prediction. The stage is set for silver to climb to unprecedented heights, reaching $350 an ounce. Let's summarize how this could unfold and why it's a scenario worth serious consideration. Firstly, the historical performance of silver during times of economic crisis shows a consistent pattern. When uncertainty and fear grip the markets, investors flock to precious metals. The current economic landscape is rife with potential triggers for such a rush. The looming threat of new pandemics, as we've seen with COVID-19, has the power to disrupt global economies, induce market volatility, and undermine confidence in fiat currencies. In such times, silver's intrinsic value and historical role as a safe haven make it a prime candidate for investment. Secondly, the unprecedented levels of debt and expansive monetary policies by central banks worldwide have created a precarious economic environment. The potential for inflation or even hyperinflation is a real concern. As central banks print more money to stimulate economies, the value of fiat currencies can erode, leading investors to seek refuge in tangible assets like silver. This metal's ability to retain its purchasing power over time makes it an ideal hedge against inflationary pressures. Furthermore, the centralization of control over essential resources such as energy, food, and water adds another layer of risk. This centralization can lead to inefficiencies, price hikes, and reduced public trust in the management of these resources. In such a scenario, silver's status as a decentralized infinite resource enhances its appeal. It offers a form of economic security that is independent of centralized control, making it an attractive investment during times of resource scarcity and mismanagement. The ongoing green revolution amplifies silver's industrial demand, particularly in solar energy and electric vehicles. As the world accelerates its shift towards renewable energy, the demand for silver in photovoltaic cells and electric vehicle components is set to soar. Countries like China, the United States, and India are heavily investing in solar infrastructure, driving up the need for silver. Similarly, the global push for electric vehicles, supported by government policies and incentives, ensures a steady demand for silver in the automotive sector. This industrial demand, combined with silver's traditional role as a monetary metal, creates a dual source of support for its price. Expert opinions and institutional forecasts further bolster the case for silver. Analysts like David Morgan, Mike Maloney, and Peter Schiff highlight the metal's undervaluation and its potential for significant appreciation. Their insights, coupled with bullish forecasts from major financial institutions, underscore the unique position silver holds in the current market. These respected voices lend credibility to the prediction of a substantial rise in silver prices. Potential economic disruptions, such as geopolitical tensions, cyber threats, and natural disasters, add additional layers of complexity and risk to the global economy. Each of these factors has the potential to trigger increased demand for safe haven assets like silver. As investors seek stability amidst these uncertainties, silver's appeal grows stronger. In conclusion, the convergence of these factors creates a compelling case for silver's ascent to $350 an ounce. Historical precedents, economic conditions, industrial demand, expert insights, and potential disruptions all point towards a significant increase in silver prices. Alex Newman's prediction is grounded in a thorough understanding of these dynamics, making it a plausible and realistic scenario. For investors, this means now is the time to consider silver as a critical component of their portfolio. As we navigate through these uncertain times, silver offers a beacon of stability and security, with the potential for remarkable returns. Remember, this is not financial or investment advice, but an exploration of the possibilities based on current trends and expert analyses. Always conduct your own research and consider seeking advice from financial professionals before making investment decisions. And if you found this analysis insightful, don't forget to subscribe to our channel for more in-depth discussions on market trends and investment strategies. Stay tuned and stay informed.
For you about things that you heard from your father in the past that, right in one ear and out the other. But that statement he told me about life being like a roll of toilet paper, as you get older, it starts to spin much faster. Maybe it's true after all, because the passage of time is extraordinary to me lately. And I'm cognizant of it intermittently anyway. I'll say, like today, geez, it's already, we're already halfway through the year plus. It's crazy. Anyways, it's good to be here, and lots going on for sure, Dunning. And I do believe that this trend of acceleration in events and in chaos and in newsworthy things to talk about will only increase. We've said that since the beginning of the year. At the beginning of the year, we were told 200 BRICS meetings. Well, today they're having a big BRICS meeting related to finance. I think the actual title of it is the BRICS Deputy Finance Ministers and Central Bank Governors. They're meeting today. I wonder what that's all about. Could it be discussing their commodity-backed currency? Who knows? But the big meeting in October, the election in November, there is no shortage of things to talk about and ponder. But today I want to mostly talk about silver. And, I don't know if you'll let me just go here. I watched an interview on Palisades Radio with a very, very fascinating man named David Jensen. I want to give him credit for a lot of what I'm about to talk about, but it got me digging into what he was talking about because it made so much sense. So I started digging myself, and I find what he had to talk about fascinating. And I think when you put all of this together, it starts to put together an interesting thought experiment, if nothing else. So, I think today, I'm glad you put on your silver tie. I think today we should talk about silver, if that's okay by you.